Welcome to our live Q&A for the NCB Financial Group APO here on L.E.A.R.N Invest. Today I have the pleasure of speaking with Malcolm Sadler, CFO of the NCB Financial Group, and Angus Young, CEO of NCB Capital Markets. So we're going to be going through some of the questions that have come up maybe since our last discussion with NCB, go through maybe some of those topics that we think maybe is worth asking from another perspective, or maybe digging a little bit further into some of the things that we think are relevant as we close out our coverage of the NCB Financial Group APO. So let me just do a quick recap of the offer for those who this may be, I guess, the first video you may be watching. So the offer opened on May 6th, so that would be Monday of this week. It closes May 27th. The minimum that you can purchase is 100 shares. It's $65 per share. And if you're an NCB employee or a part of the employee reserve pool, then you'd get it at $58.50. The basis of allotment will be 6 days after the closing date. So that's estimated to be June 3rd. And then, of course, if there are any refunds or any such thing to do, that's usually within 10 business days after the basis of allotment. And then, of course, if you understand how this process works, then the shares will be added to your portfolio, whether on JTrade or any other platform, usually before, maybe within the next 30 days after that or so. In terms of use of proceeds, they've mentioned that the funds will be used as a part of their deliberate plan to reallocate capital with a focus on reducing debt and bolstering capital. And if you remember our last interview, we went into the details of that, right? Because we discussed in our prospectus review that was a little bit vague for us. So we went into the details. We spoke to Robert Almeida, CEO of NCB Financial Group, where we dug into this a little bit. So what we're going to do for this Q&A, as I mentioned before, is just wrap up in terms of questions. We'll hear from Malcolm, we'll hear from Angus, and then at the end of it, we should have now a very clear picture as to what NCB is trying to do. And so please join me in welcoming Malcolm and Angus. Good evening, gentlemen.
Good evening.
Good evening, Jermaine. Good evening, everyone.
Good evening, everyone.
All right. Thank you so much for joining us. We are streaming on all platforms, so we have a wide number for community that will have access to this interview. So I'll ask you, Malcolm, since this is your first time on our platform, to just introduce yourself briefly, and then we'll get into the questions.
Okay. I've been with NCB for a long time, Jermaine, and for a long time to the L.E.A.R.N Grow and Invest team. I've been here for so long that these days I just say I'm here for a few decades. but I've gone through the ranks here at NCB. I've moved up to where I am now as CFO of the financial group. I would have been CFO of the NCBJ, the bank, up to last year before I took over as CFO for NCBFG. But I spent most of my time in the bank and most of my time in finance. It has been a great ride so far, being here at NCB. Each day feels like the first day. I don't know if there's anything else you want to know about me.
That's it for now. It is not really, I guess, a formal interview. We are planning to launch a CFO series at some point to complement our CEO series, but that's what you said was fine, right? I'll just ask you though, how has the scope of your role changed from being CFO of the bank to the group?
Yeah, well, with the bank, I mean, it's an operating entity, so you would be, closer to the action, closer to the operations within the bank. At the financial group level, it's more managing the assets that we have, the subsidiaries. And I mean, our operations within NCBFG is dealing with the subsidiaries, allocating capital, ensuring that they meet their targets. that they're able to pay dividends, etc., that they're managing capital, that they're growing the bottom line, and all those things that an investor wants. That's what I want at NCBFG in terms of the assets that we manage.
Okay, fair enough. So I'll get into the whole dividend conversation a little later. As I told you both, I'm a dividend investor. So when you say the word dividends, my ears just kind of perk up a little bit. So we will be talking about that. We also know that your Q2 results came out earlier tonight, so we'll talk about that a little bit as well. But I wanted to start the questions with you, Malcolm. How does this APO shape, or I guess add to the strategy for the group? You've started, making some changes last year. How does the APO, I guess, culminate those changes?
Yes. So it's a literally a culmination of our strategies. The APO is actually, from a percentage perspective, is actually a small part of the overall strategy. We would have announced it some months ago that we were going to do it, up more than 300 million units, 350 million units, and we're doing 78.5. I mean, it complements the strategy. If you're looking at deleveraging and in terms of shifting the percentage between debt and equity, then the APO is important, and it's a part of the strategy. We tend to look at a mixture of activities, of initiatives, and the APO is important in broadening the customer base, in adding to the share capital. So we look forward to a successful APO.
So what was the thought process in changing from that initial maybe 300 million projection to just 78? Is it that you don't need that? I feel like after your Q2, you may be like, well, maybe we don't even need the APO at all. Like, is it that you need as much capital as you once thought?
Well, I mean, we couldn't keep the market waiting. We we have announced it for so long that every quarter we're asked about it. Are you going to do the APO? Are you going to do the APO? So we're doing this one. It's much smaller. It's not that I mean we have already launched it. So even though we're showing an impressive Q2, we believe that the APO is still important, and it's a scaled down APO. I hope no one is disappointed that we're not going for the full 350, but it's 78.5 for now, and the possibility to upsize to 117.7 billion.
Yeah. So I mean, what would you say? I mean, apart from the strategies that you've been doing, right? The fact that you have scaled down the offer, what does that mean? And I mean, we will see it more, I guess, when we start talking about the Q2 results. But what does it mean in terms of where the group is headed, right? Can you speak a little bit about that?
Yeah. Well, in terms of in terms of where we're headed, if you look at where we were at the end of September 2023, and then you look at where we were at the end of Q1, and where we are when I update you shortly in terms of Q2, you'll see that the strategy is working, and we expect to continue to improve over time. Where we are in Q2, we have made certain commitments, not just around the APO, but around our efficiency ratio, among other things. So we're working on all those strategies, and you will see the improvement in our results, and you will see that the things that we have committed to that we are delivering.
So what does this mean for example, I've noted an improvement in your EPS for the most recent report. How does the APO impact your financial position, and so those things like your EPA. So how do you see that being impacted in the short term and the long term?
Well, I mean, the EPS should improve. A part of the strategy is to bring down interest expense, which will impact the bottom line. I mean, there will be more shares out there in terms of the offer, the 78.5 million more, but we expect profit to continue to grow. So the EPS will be growing as well.
Okay, so you're not really expecting any fall off in terms of that as we continue to go through subsequent quarters?
We're not projecting any fall off.
Okay, choosing your words carefully. I understand. So what I'll ask though, and this is the final question for now until I can get through some questions with Angus. What do you think in terms of where the financial landscape puts you in terms of seeking to do an APO right now, right? I wanted to get your perspective on that because you're seeing that impact in terms of the group. You're seeing it in the subsidiaries. You're seeing it in where you're coming from in terms of the last 5 years. What do you think in terms of, this leads into my question about, what happens if you're not able to raise the amount that you're looking for?
Yes. Well, I know Angus will not fail, right? As well. but when you look at the APO, it's around 5.1 billion. If you look at our shareholders' equity as at the end of this Q2, total were 199 billion in terms of total equity, and 160 billion in terms of attributable to parent. So when you look at 5.1 billion, it's a fairly small component of capital. We're not expecting to fail, but we always have many options. If you notice, we would have announced that we're doing various things, not just looking for fresh capital in terms of the APO, but also maximizing the capital that we have already within the group. So we don't expect the results of the APO to have a significant impact in terms of we don't expect to fail, right? So we're not contemplating failure. But we always have options, and we can get other things done as well.
Okay, so I'm happy that you said that because I'm then going to ask you what are some of those other options. So I'm not saying that we're worried about failure here, but what could you potentially also look at as, I guess, options to raise capital?
Yeah. Well, as we would have announced, we would have already announced that we were actually disposing of certain assets that are not critical for us. Would have already announced NCB Cayman will be sold. That agreement is already signed. We're waiting regulatory approval. We have already upstreamed capital from the subsidiaries, and we would have also announced this APO as well. We would have also indicated that in terms of capital, generating capital internally, that one of the key things is to bring down the cost to income ratio. It was at 82.54 at the end of September 2023. It is now, as you would have seen, because you have read the release this evening, we're at 70.45. So that allows us to generate capital, more capital internally, in terms of building our retained earnings.
Okay. So I've heard Angus say on record, this is the one and only APO that you intend to do. So I'll switch over to Angus, and ask just some questions from just what you've seen. So I know you've done the rounds
Mhm.
in terms of interviews, different platforms you've spoken on, etc. What's the overall sentiment that you're seeing about the APO right now?
Yeah, so I mean, Jermaine, don't take my word for it. We've seen 5 or 6 third-party independent brokers release their valuations of NCBFG. This all within the last week, and I would say to you that they're all mid to high 70s, one even in the 80s. So don't take my word for it. The market is valuing NCBFG at a significant premium to the APO price. And I think that it's worth a lot more when a third party independent says it than when I say it. So, we feel really good about that, and we feel buoyed by the market support that we're getting so far. So we, no doubt, we heads down, drive to the line, and we stay in our lane with a focus on having the deal fully subscribed. We feel good, Jermaine. The market, I think, is supporting us. And we feel very confident that we'll be successful on May the 27th.
Okay, so in terms of, I know, and I see Daniel here from Trinidad. I know one of the questions Daniel might have had, and hopefully I'm phrasing it right, Daniel. But Daniel was concerned that the fact that you are not allowing the TT market to also take part in this offer, that it's somehow negatively impacting shareholders on that side of the world. So what would you say to that?
Yeah, so good evening, Daniel. So saw your post, and I'm so pleased that Jermaine, you've used the opportunity to with this forum to have Daniel's concern addressed. So what I would say to you is this: given our dominant position in Jamaica and the fact that we are systemically important and systemically significant, we believe that this APO is an opportunity for every Jamaican to own a piece of NCB because of how important we are to Jamaica. One of the number one aspirations of this APO is to broaden the investor base of NCBFG. And the NCBFG shares is cross-listed. So on the Jamaica Stock Exchange, it's on the Jamaica Dollar platform. On the Trinidad and Tobago Stock Exchange, it's on the TT Dollar platform. So for example, if we were to do a rights issue, Jermaine, we'd be raising J in Jamaica and we'd be raising TT dollars in Trinidad. But the whole purpose of the capital reallocations and the strategies behind it, including the APO, is to delever NCBFG. And NCBFG does not have any debt in TT dollars. So remember, the use of proceeds of the APO is to delever at NCBFG, but NCBFG does not have any TT dollar debt. So the currency that we are raising is J dollars. So where the APO is concerned, the focus really is on raising J dollars so that we can use that currency to pay down the debt that NCBFG has, which is in J dollars and US dollars. There's no debt in TT dollars. So said another way, NCBFG has no use for TT dollars. And that's the NCBFG shares listed on the TT dollar platform on the Trinidad and Tobago Stock Exchange. So I hope that answers the question, Daniel and Jermaine, in terms of why an APO and why only an offering on the Jamaica Stock Exchange. It's because of the use of proceeds and the APO, that particular structure is because we want to broaden the investor base of NCBFG.
Okay, I got you. And Daniel actually posted a couple more questions. So what I'll do is, there seems to be one for you, Malcolm, or one that I think will be applicable. He's asking, what is your target debt to equity ratio and your target efficiency ratio?
Well, we'll start with the efficiency. So our objective is to get into the low 60s for the efficiency ratio. and we were at 82.54. So we're working towards getting into the low 60s. In terms of, I mean, when we look at the NCBFG level, one of the ratios that we track is the double leverage for a holding company. The objective has been to get it on the 120%, which is a benchmark maximum. We're already on the 120, so we're already within the benchmark standard. The aim is to bring it down even more. We're still above 100%, but we're under the 120 maximum, and we'll continue to push to get it under 100%. And that's a holding company ratio.
Okay. And then I see another question here that could go to you. He's asking if there is any progress on the executive compensation policy and making that policy public. This is especially true if for executive share options that can be dilutive.
Well, in terms of executive directors, we do disclose compensation in the annual report. In the note, in terms of key compensation, key management compensation, we do isolate the executive directors, and we show those numbers. We also isolate the numbers for all the key executives as well, in terms of their compensation. You're seeing it in terms of total. You're not seeing the details, but these are questions that are fair questions to be raised at AGMs, in terms of raising with the directors, in terms of the compensation. But we do disclose that information in the annual report. You don't see it quarterly, but it is disclosed on an annual basis.
Jermaine, if I may interject, my colleague Malcolm, he suffers from modesty, right? So let me help him out here. Malcolm said that we started this journey in June, July at an efficiency ratio of above 80%, right? When you're running an efficiency ratio of 80%, 20 cents on the dollar is what you get to keep as profit, right? And Malcolm would have said that our aim is to get into the low 60s. Now, Malcolm, you could correct me if I'm wrong, but in our Q2 release, we do mention that the efficiency ratio for the last quarter, meaning up to March, was actually circa 66%.
Yes.
Right?
For
Q2. So Jermaine and Daniel, think about this. If you're running 80%, it means you keep 20 cents on the dollar, right, as profit. If you reduce your efficiency ratio from 80 to 60, your profit doubles, right? And Q2, we're already at 66 point something percent. So think about that effect in terms of the bottom line. Now, over the last 10 years, we also have been growing operating income of an average of 11% a year. So even if we held expenses level at where they are, just by virtue of growing at 10, 11% a year, your efficiency ratio would improve. So the trajectory is very, very clear. So, Malcolm would have mentioned that focus on the efficiency ratio, and he would have mentioned that you would have asked him, well, Malcolm, if Angus fails, right, and he doesn't raise the money in the APO, what's the plan? And Malcolm said, well, our earnings are very strong, and that's a source of capital also, right? And operating income has been growing at 11% on average every year for the last decade. You put that now on top of an efficiency ratio that's going from 80 to 66, and you get the value being released that way.
Okay, I got you. And Daniel, you can let me know if those answers are clear for you. I tried to capture all the ones that you asked on LinkedIn last week, so I think I did. I missed one, and maybe you can answer this, Angus. He asked, aren't you also raising capital via a bond offer So why raise debt and equity at the same time?
All right. Jeremy and Daniel, we are refinancing certain maturities. We're not raising new debt. So we're not increasing our debt stock. So while we were in the market for a small period of time with the APO being announced and also refinancing via a bond issue, it's not new debt. We're not raising new capital. We're just rolling certain debts, and we'll do so less and less going into the future because the focus is on deleveraging.
Okay, gotcha. Daniel is saying, thank you for addressing his concerns. Issuers can choose their market of choice to raise capital. TT investors would remain diluted based on a high threshold of buying into the APO. TT feels unloved. So I think I understand where Daniel is coming from.
No, so Jermaine, the truth is, anybody in the world could subscribe to this APO. You just know that whatever currency you're investing, it has to be converted into Jamaican dollars. So it's not restricted to Jamaicans. It's restricted to being able to bring J dollars to the table.
Okay. And Tavares is asking, what will stop employees from selling their shares at $65 after the offer has ended? Because I guess there's an employee discount for them.
Yeah, so our employees are very smart people, Jermaine. I don't think we deliver Q2 results like what we have. And our employees in our DNA, through the different wealth management philosophies, etc., we think very long. And they understand this machine that is NCB, and they understand all the fiscal initiatives that we're executing, and they know that the value will be unleashed in the future through a number of ways. One, by just the performance and the turnaround of the company, that's one. Two, NCB will rise with the tide with Jamaica, and Jamaica is on the right trajectory. Three, there are several growth initiatives that we would have mentioned before in terms of, in the past, NCBFG would have operated like a whole co. So NCBJ here, Guardian here, and those two ecosystems not synergizing. That's about to change. Within the NCBJ banking group, silos again, not really interacting with each other. There are many diamonds in the backyard, so to speak. That's started to change already. So there are a number of growth strategies that our staff, our team members are a part of, and they know that these things will take place over the next year or two, which will unleash further value. So I don't think there's significant or material risk of that, Jermaine, because they know the story better than anyone else.
Okay. And I mean, is there some, I know some companies might have like a lockout period or something like that. Mm-hmm. Would that be applicable here? I mean, on one side, I'm thinking, maybe if I purchase shares at a discount, which I was able to do when I worked for Microsoft, for example, I was able to purchase shares as an employee at a 10% discount, and I could really sell those whenever I want. People buy and sell their shares on their own, volition all the time. So is there some form of lockout period though that is applicable here? Okay.
No, only team members who are subject to blackout periods across the board. That would be the only restriction with respect to selling shares.
Okay, got you. All right. Tavares said, very smart indeed. That's a quick 12%. Okay. And 12% is more than most bond payments. Okay, all right, cool. So let me see a question here that looks like it's for Malcolm. How comfortable are you with Basel III and how it will impact your loan portfolio moving forward? Specifically, are there any loan sectors that you will focus on given the change in risk weights?
Yeah. So in terms of Basel III, we have been preparing for more than a year for the implementation of Basel III. Based on our projections so far, based on our submissions so far to the regulator, which we do submit to them quarterly, our Basel III ratios, even though it's not yet implemented. So far, we're ahead of the minimum requirement, comfortably ahead of the minimum requirement. Based on what we have seen, based on how diversified we are in terms of our loan portfolio, the impact has not been significant in terms of the risk weighting on the loan portfolio. It is diversified, so there are certain categories that it improves capital efficiency when we go through the details of Basel III. So far we are tracking comfortably ahead. So we don't expect it to significantly impact the sectors that we continue to fund, as right across, I mean, almost 50% of the portfolio is in relation to households. And for households, you have a number of categories within households, whether that's mortgages, motor vehicles, etc., all with different risk weighting, different industries of different risk weighting. So we don't expect it to be a challenge for us in terms of growing the portfolio and continuing to fund the sectors and the households that we are currently funding.
Okay. I see a question here from Daniel that may be relevant for you as well, Malcolm. Are there any cross-default clauses from related companies that are currently in talks with creditors for extensions after missed payments that can affect the quality of the financial group? So this is a very specific question. So,
I think that's for Angus, right?
All right. Okay. So there. All right. So since Daniel wants to talk in code, right? I'll talk in code. This is an example. This is an hypothetical example. If I, Angus, own a block of JP Morgan shares, right? And I decide that my friend Malcolm has this new sexy tech startup company that I want to invest in. So I take my JP Morgan shares and I go get a loan. And I secure that loan with the JP Morgan shares. I get the loan and I give it to Malcolm and I invest in Malcolm's company. When the loan is due, I'm not able to pay off the loan because Malcolm had a delay on his side and he says that we need to be a little bit more patient with the investment, etc. And I'm unable to pay my loan. What does that say about JP Morgan shares? Absolutely nothing. It means that I've used JP Morgan shares as collateral to do something that is totally outside the remit of NCB. So in this example, what I'm trying to say is, Daniel, no, there are no cross-default connections in terms of, entities that may be using ownership in NCBFG stock to secure leverage. That is totally outside of the remit of NCBFG. Absolutely should not be commingled and really has no business to do with NCBFG.
I think I just got the connection from the explanation. I'll leave it there. I like your explanation, but I think I understand why it was asked, and I also understand why you responded the way you did as well. All right. Let me see here. Orville is bringing my attention to the question from Dan that's not answered. I think the top two are the same. Dan is asking, he says, hi, Angus, you mentioned that the sentiment in your last interview that the market is pricing the APO, is pricing NCBFG higher than the APO price. How is this if the share price doesn't reflect? Okay, I think what he's saying is that in our last interview, you spoke about the fact that we were talking about why the $65 price versus the market price of $60.
Yeah.
And you were explaining that,
you want me to repeat?
Price. Yeah, I think
All right.
So go ahead and repeat, and then I'll ask him if that answers his question.
Sure, no problem. So I'll say off the bat, Jermaine, the following, right? If you're buying in to what the story of NCBFG is, you should be clearing the queue. Right now, you should be clearing the queue and securing your discount. In July 2013, the share price was $65. There was a pivot that took place in July. We refer to as NCBFG 2.0. And that pivot really has to do with how we reallocated capital throughout the group. I'll just speed through it very quickly, Jermaine, because we went through it the last time, right? October 2013, we slashed $8 billion Jamaican in recurrent expenditure. That's about 50 million US in recurrent expenditure out the door.
2023, Angus. I think it's at 2013, right?
Oh, sorry, October 2023. We would have slashed 8 billion J in recurrent expenditure. We would have announced the sale of a non-core asset, meaning NCB Cayman Bank. We will remain in the Cayman Islands through our broker-dealer. And that sale would be, the impact effect would be immaterial. We also identified 15 billion J, which is about 96 million US in excess capital in our opcos, and all of our opcos are regulated entities, so their capital bases are fine. This was excess capital, and that would have been upstream to NCBFG. And then the fourth initiative is the APO. So we've done all of that work, and we're here today at $65, and the market in the queue, there's some sub 65. Why is that, Jermaine? Why is that, Diane? It's because markets are inefficient. We belong to inefficient markets. Jamaica's capital markets are the most sophisticated in the region, but there's still a degree of inefficiency. And two, at our extraordinary AGM, we would have announced that we sought approval and received to do an APO of up to 350 million shares, which Malcolm would have mentioned earlier. And here we are today, only doing it for 78.5 million shares. So with an announcement of 350 million shares in the space, people are going to be apprehensive. People are going to be anxious. People would want to know, that's a hell of a dilution. And I think that had the effect of stagnating the share price and trading. And that's why Malcolm would have mentioned, we just need to get the APO out the door and put it behind us. And it's for a very small amount, but we needed to get it done. So for those reasons, I believe that the market inefficiencies have the share price at sub 65. But I would say this to you, Jermaine, as I said the last time, there's a fantastic opportunity because there's a difference between perception and reality. And when there's a difference between perception and reality, there is value trapped in that distance. And we believe that the APO will unleash that value. And the Q2 results that were released today is pretty much a testament that the run rate we speak about of NCBFG 2.0 is validated. And then, of course, the announcement of another dividend since NCBFG 2.0 again validates this strategy and all the capital reallocation work we've been doing. So that distance between perception and reality is the difference between the thin queue below $65, and that's how we explain it, Jermaine. And the fact that there's a cultural expectation that you do an APO at discount to market, and we're saying, boy, this, at $65, you're talking book value. We won't go south on that. It wouldn't be worth our time. It wouldn't be worth the value that you give up. So we're very confident that the market will understand why $65 is the price, and the market may have some thin queues sub 65 that we're not particularly concerned about.
And I guess, I don't know if this is the right way to think of it, but I'm thinking if I want to raise a certain amount of money, the lower the price I set those shares at, the more shares I have to issue. So if you're concerned about dilution, then you wouldn't necessarily want the share price any lower, because then the company would essentially have to issue more shares to raise.
Theoretically, yes. But the truth is 78.5 million shares is 3% of the capital base. So if you're an incumbent shareholder and don't subscribe to the APO, it's a potential 3% dilution. If we upsize the APO to the maximum amount, it'll probably be circa 4%. So it's immaterial.
Yeah, and you actually did that breakdown in the prospectus. It showed, that number as well. Okay.
Yeah.
All right, so let us talk a little bit. I'll just ask you, Angus, before we talk about Q2, because I'm very interested in what's happening with Q2 here. What would you say? Who would you say this APO is ideal for? Who is the ideal investor for this APO?
All right, Jermaine. This is what I would say to you. It is very difficult to do a transaction in Jamaica, financial transaction, whether intentionally or unintentionally, whether direct or indirect, and not touch some aspect of the NCBFG ecosystem. So if that's the case, and if this is a case where we have 30 plus percent share of deposits, 33% share of the repo market, dominant positions in Jamaica, and you use these services, you should own a piece of it. So what I would argue here is that this APO should be subscribed to by all Jamaicans. And because of how important we are to Jamaica, given that we're systemically important and significant, this APO in effect could very well be an opportunity where we democratize someone gaining access to ownership of the rock. That's what I would say.
Okay. So what I'll do now, we have maybe about 20 minutes left in our interview. I'm going to ask Malcolm to give us just some context. Let me share my screen on the Q2 results. Hold on, what am I doing here? Here we go. So this is just a highlight screen, right? And of course, some numbers jump out at me. So I'll ask you, Malcolm, for your initial thoughts on your Q2 results, and then we'll get into some specific questions.
Well, I guess what you're seeing there is that NCBFG 2.0 is working. So it's a very good quarter, a very good Q2. It's Q2 is actually higher than Q1. What you're seeing here is the 6 months. We're at 13.7 total, 8.65 attributable. We have doubled. We have doubled the prior year. When you look at March 2023, we would have come out at around 6 billion total in Q1 December 2023. We're showing 7.7 billion for Q2 March 2024. What you'll also see, what's not on the screen in terms of our efficiency measures and in terms of our aspiration to bring down the cost to income ratio, as would have been discussing that all evening, and that's down to 70.45, and as Angus indicated earlier, it's in the 60s if you're just looking at Q2 alone. Of course, the EPS is up, as you see there, 3.68. In terms of what you're also not seeing on the screen, is that we have also declared a dividend for Q2 as well, and this is the third dividend payment, or the third dividend declaration, since we have paid two. We have declared this one, and it will be paid in June. So it's 3 consecutive dividend declarations so far for the financial year. The numbers here are strong. As you say, our total assets still growing. The largest asset base in Jamaica. We continue to hold that position. So we're heading in the right direction. And the commitments that we made at the beginning of Q1, we're delivering now. So that's what you're seeing here, the outcome of us getting it done.
So I wanted to ask you, what would you are these results simply just based on what you've already been doing? Is there anything, without even looking at them, is there anything one-off that maybe won't happen again? Is this, are we to expect anything? Meaning, are you projecting this level of growth quarter over quarter, or is it more of as you continue to, I guess, just walk out the changes that you've been making, that you will just see those results? I don't know if you understand what I'm asking. I don't know if it makes sense in terms of what I said.
So there is a one-off in the results. One-off in Q1. We would have taken a positive adjustment gain on adoption of IFRS 17 in terms of reclassification of certain investment securities, would have taken in excess of 3 billion in Q1. What you would have had in Q1 as well is the usual annual asset tax, which is booked in full. That amount is in excess of 2.5 billion. That's normally a one-off in a quarter, but it recurs every year. So in terms of the trajectory, looking at in terms of Q2 being higher than Q2, yes, there would have been one-offs, but we expect to continue to be progressing in terms of our profit levels, despite one-offs. The objective is to continue to grow. But the key number there in terms of what is within our control, which is managing costs. And Angus had mentioned earlier, it's a component of managing costs and continuing to grow revenue. The revenue is growing at a good pace. When we look, so for this quarter, for example, operating, or for the 6 months, operating income year over year grew by 17%. When we look at the growth in terms of operating expenses, that's a 5% growth. So if you have that kind of combination every quarter, where revenue is growing faster, at a faster pace than operating expenses, then we should be able to maintain the bottom line.
Okay. So my next question is going to be really as it relates to dividends, right? And I know that was one of the very big, I guess I've never heard the word dividends mentioned so much over a 3-month span as it was last year, right? So as you mentioned, this is your third dividend declaration, soon for this third one to be paid. What does that look like in terms of, and I ask all CFOs this, right? What's that balance between continuing to paying out dividends versus, continuing to maybe see some of the changes that you want to see internally from that capital, right? Because you do have, for example, the debt, right? Because you're raising money to pay down debt. What's that balance in terms of, continuing to pay dividends? Is that something that we should expect to see 2 more declarations by the end of the FY? And how do you balance with your priority to bring down debt?
Well, there are 3 things we're trying to do in relation to capital, or in relation to the use of capital and earnings. One is to reward the shareholder in terms of returns. We're a regulated group, a number of regulated operating entities, so we also have to meet our capital ratios, and we need to grow the business. So those 3 things we need to do. Our plan is to balance all 3 going forward. One shouldn't have to suffer because of the other. So in terms of operating our business, yes, we have to bring down the debt, but we also need to reward the shareholders.
Okay, so we won't be seeing any long stretches without a dividend payment anytime soon.
Well, definitely not 2.5 years.
Okay.
Because we would have paid a dividend, one dividend after the pandemic. I believe it was actually paid out in May 2021, and no more until Q1 this year.
Yeah.
So that type of drought is not something that we would want to continue.
Okay. So I do have one more question re dividends. Is there usually a target yield that you go for, or you're just looking at it each quarter to decide how much cash you can afford to pay out?
Yeah. Well, we do have a dividend policy, which is disclosed in the annual report each year as well, which is a maximum of 50% of profits. But as I indicated earlier, we're balancing the three the three demands on capital. But the aim is to always to get close to the policy amount.
Okay, so let's say we double. Let's say the next 2 quarters remain the same, then we'll say a really nice dividend for the following quarter.
But as usual, if you look at how it is written each quarter, when we write to the stock exchange, we indicate that management has recommended a dividend payment. So we continue to assess every quarter, and we make recommendations based on the numbers in front of us.
Okay, fair enough. So I have just about 4 more questions here, I think, and then we can wrap up. So Dan is bringing back his question. So previously, APO stocks appear to have suffered a long period of share price depression post-APO. What will NCBFG do differently to prevent this from being the case for the NCB Financial Group share price? I think this may be more Angus. I don't know.
Well, Jermaine, I have been in investment banking for over 2 decades, right? And what I've learned, and that's throughout the region, what I've learned is that you always play the long game. Certainly the institutions that I've been a part of, NCB being the last decade, we view ourselves as the gold standard, and we think long, right? So to do that, it drives a certain behavior, and that behavior is that you really hold fast towards you stick to the fundamentals, right? But we belong to inefficient markets, so you stick to the fundamentals and you tweak for domestic nuances, right? So what do I mean? I mean that this APO and this opportunity to buy into NCBFG at book value, I would like you to keep in mind that NCBFG has traded in excess, in the past, has traded in excess of 3 times book, right? And this APO is giving you an opportunity to buy at book in an environment where corporate earnings are on the upward trajectory and the stock market is flat. And that distance between those 2 graphs is growing. And that could be for the reason that we know that interest rates globally are at an all-time high, right? And when interest rates are high, valuations are low. So the fact that this share has traded in excess of 3 times of book value in the not too recent past, and the fact that you're getting to buy in at book value, where the pivot has already taken place, we have a second quarter validation of the run rate. We have an environment where we're performing at these numbers in a high interest rate environment. Use your imagination to think what it would look like when interest rates do come down and the additional value that would unleash. Think about the effect on the stock market indexed in general when interest rates do turn. Think about all the synergistic behaviors that we're implementing now within NCBJ and within NCBFG. Think about you drive around Kingston, Mobay, Ocho St. Thomas, and there's so much going on. Real estate, commercial, residential, bridges, roads, new power plants. Jamaica is on an obvious upward trajectory. The government of Jamaica is driving their debt to DGP down. They're being upgraded, their sovereign rating. So think about the upward rise of the tide, that is Jamaica, and the fact that NCB is systemically significant, that we will rise with the tide. When you think about all of those things, you must it is not crazy to suggest that the share price at book value is of tremendous value today. If you believe everything that I've just said with respect to the trajectories, with respect to the future of interest rates, the rise of Jamaica, the things that we're doing differently within the group, this is one of those shares, Jermaine, that price is what you pay, value is what you buy.
Okay. So Daniel is asking, saying many thanks for addressing his questions. Do you have a target long-term average for your return on equity by chance?
Malcolm?
Well, we're at 11.18. We're looking to the north of 11.18. So where we are now is not where we want to be. We want to be higher than 11.18, which is where we are for the first 6 months. So it's north of that number.
Okay, you don't want to give a definitive one. Okay, no problem. Is there an outlook for Link? Will you continue to invest in its build out, or are there higher priorities across the group? Actually, I'm really glad that this question is asked. I'm not clear personally about maybe the overall strategy for Link. I'm not sure if you can speak to it, Malcolm, really, but I think it's a great question because I'm not really sure what's happening as it relates to Link.
Yeah, so Link is still active. Link is a part of National Commercial Bank Jamaica Limited. It is now being operated by NCBJ. So it's a part of one of the channels that we want to use for financial inclusion. So we would have built out Link significant build out up to September 2023. Then it would have been transferred to NCBJ, and we continue to build out. Even up to now. So you will be hearing much more about Link. It's an important option that we have in terms of the payment services and in terms of financial inclusion, which is very important to us in terms of social responsibility. So it is. You'll hear more from Daniel Cameron Duncan, who is now in charge of Link.
Okay. Because I'd love to hear more. I was one of those persons who was happy to sign up for Link. We actually did a fundraising for our community via Link, right? So we have quite a bit of money there, and I remember I went to the ATM to try and withdraw that money, and actually had a little challenge. So those funds are still there. So I'm happy to hear that it's still something that you're working on, still something that you're hoping to move forward, because I'd love to see that. I personally don't like to handle cash at all, right? I prefer to have zero cash, and so I prefer to not also have to worry about the security of necessarily my debit or credit card. And Link, I thought, was a step in the right direction. So I'm happy to hear that, and I look forward to further updates. I know that I've seen the marketing kind of die down, so I figured there was some sort, I guess, recalibration along with everything else. But happy to hear that.
Yeah, Link is in great hands. No, it's in the hands of the largest commercial bank in Jamaica. So it will definitely be integrated into the platform. And as you would be aware, it's the only app that can handle Jamdex at the moment. So it has a bright future. Yes.
All right. So let's take two more questions. I see a comment here from Philip that says, NCB Capital Markets doing their parents' IPO, bond, and Omni's IPO at the same time is a sign that the capital markets are back. And he's asking if you agree, Angus.
Yeah. So I mean, I would have declared several weeks ago that NCB Capital Markets' commitment to Jamaica is that we will revitalize the equity capital markets in Jamaica. And the fact that we launch our APO and the Omni IPO simultaneously is a demonstration of our commitment to the capital markets and the confidence that we have in both offerings. So we're very, very proud to be running 2 equity capital market deals at the same time. And we're very confident that they will be very successful. So yes, I agree. It's very, very deliberate. We are here to revitalize the markets, and we have remained extremely committed to the domestic system.
All right. And I think there's one final question here. Roberto is asking, what's the medium to long-term plans for the wealth management platform, particularly from the AUM standpoint?
Sure. That's a great question. And I would say this to you. One of the inefficiencies of our past behavior is that within the ecosystem of the NCBJ banking group, we were in silos, right? So you have NCB Capital Markets doing its thing, you have NCBJ doing its thing, NCB Insurance and Pensions doing its thing, and those 3 ecosystems not really integrated, not really talking to each other. And that's crazy. So in July, we would have splashed the silos of those different institutions in terms of our view that we must adopt this share of wallet approach, whereby we view there's one customer, but there's several ways that we could serve that customer within the NCBJ banking group to start. And I think that you'll see going forward that type of culture and that type of modus operandi will release further value. So where AUM is concerned, just think about all the investment products and services that perhaps the NCB Capital Markets offers, and then think about the ecosystem that NCB Capital Markets belongs to in terms of it belongs to the NCBFG effectively, and think about the scaling of those services into that ecosystem in an unsiloed way. And that generates tremendous value.
All right, so I do have a question for you, Angus. I thought about it just as you were answering just now. Would there ever be plans to maybe list an NCB Capital Markets or maybe any other NCB entities really? I've seen that in some cases. Was that something that you've ever entertained?
I would say to you that there's no intention to do any more equity type issuances within the NCBFG group at this point in time. But never say never, because you never know what opportunities may come upon the group or one of its subsidiaries that it would want to take advantage of and may want to tap the equity capital markets again. But for now, Jermaine, let me be very, very clear. A couple of months ago, we would have sought and secured approval to do an APO for 350 million shares. We're here doing an APO for 78.5 million shares, and there's no intention to access the market for further equity at this point in time.
All right. So I'll allow you to go first, Angus, in terms of final comments as we close out, and then we'll hear from Malcolm.
Sure, absolutely. So Jermaine, I mean, I think the opportunity on the table at this point in time can be summed up as follows. I don't think there's another share out there in primary issuance that offers this type of value proposition in this industry than the NCBFG APO. And I think to buy into this ecosystem at book value, given all that we've mentioned, including the Q2 results, which validates all the work that we've done, I think it's a real opportunity for every Jamaican to own a piece of NCB, to effectively own a piece of the rock, and to create wealth for themselves.
All right. Thank you for that. Malcolm, any final comments?
Yeah, sure. So when we look at the 2 key operating entities, within NCBFG are the two largest. National Commercial Bank, Jamaica Limited, and the Guardian Group. They have both been around for, in terms of, if you go right back to the start of their history, for more than 175 years, both of them. They have been around a long time. The group has unrivaled scale. It's a significant group. In Jamaica, it's the largest. In the Caribbean, it's significant. Market leadership by various measurements. Revenue diversification by segment, revenue diversification by geography. Great track record in terms of resilience. Steady earnings. We have been growing revenue every year, significant growth. And we're on track in terms of our Q1, in terms of our Q2, and we're getting it done. It's a great time to own a part of NCBFG, and it's the right time to do so.
All right. And I'm sure, Malcolm, that persons can hear more from you at your investor briefing. I believe it's 10 a.m. tomorrow. So if there's any questions that you want to ask about the group's Q2 results, then that would be the place to go. And so, yeah, I just figured you may take a minute and, mention that as well.
Yes, definitely. So tomorrow we will. What you got this evening is a pre-release, right? so Jermaine and the L.E.A.R.N. Grow and Invest team here, you have gotten it before everyone else.
Yeah, out the gate.
Yes, the exclusive.
Exactly. Market leader, right? That's what we do.
Tomorrow is the official, the official investor briefing. Tomorrow at 10 a.m. And then we'll have a post briefing with the media after. So please join tomorrow as well. You'll get more details. You'll also get to hear from the CEO, and you'll be able to ask more questions. You can ask about Link as well. So tomorrow at 10 a.m. and we'll be streaming live as well.
Okay, great.
And that's 10 a.m. Jamaica time.
Okay, well, here's the thing, Malcolm, if you say Jamaica time, that's actually a slippery slope, because Jamaica time here is depending on who you speak to.
I know we have a wide audience, not just in Jamaica, so I don't want them to tune in at 10 a.m. their time when it's already done, or it won't start anytime soon.
Man, all right. And Angus, before you go, actually, thank you, Malcolm. Pleasure meeting you, of course.
Thank you.
Angus, just a quick minute about Omni. Prospectus just came out. I know this isn't really the video for it, but can you give us like a 1 minute of it where persons can go for information? I saw someone asking if they could also, is the NCB IPO going to be on Moneyline? I know that was one of the things that wasn't necessarily clear at the start. You're a couple of weeks in. Is that any clearer now? So those two things. Is the IPO going to be on Moneyline, yes or no? And what can you say to us about Omni that the prospectus was released tonight?
Sure. So the prospectus for Omni was released. NCB Capital Markets is the sole broker on the transaction. They're a leading manufacturer in their segment, a company that's poised for significant growth with an IPO that is attractively priced. It seeks to raise $500 million Jamaican dollars, and I believe will close at the end of May. So it's a junior IPO. We're very, very excited about it. We think that it's fundamentally sound, value-laden, with a significant growth story. To answer your second question, Jermaine, just remind me. I'm not familiar with Moneyline. What is?
So Moneyline is JMMB's platform. So usually there's a history when IPOs are out that it's also available on Moneyline. So essentially, I think the person is asking, will it be available on other platforms?
All right. With respect to the NCBFG IPO, every single broker in Jamaica was invited to be a selling agent. I do believe that of course that includes GMMB, and the moment that we have that in place, an announcement will be made. With respect to Omni, I can revert in terms of answering that question, but I think that NCB Capital Markets would be the sole broker on that transaction, which of course you can access through goipo.jncb.com.
Okay, so since the Omni prospectus is out, both Omni and NCB APO is on Go IPO right now.
Yes, Jermaine, absolutely, yes.
And for persons who are unaware, you can use your JSC ID from another broker to apply. So you don't necessarily need to apply through another broker. You can just simply go to Go IPO.
Well, we'd love to be your broker, but yes, it is facilitative of other brokers' clients using Go IPO, absolutely.
Okay. All right, so hopefully that answers all remaining questions. Thanks to you both so much. Pleasure meeting you again, Malcolm. Thanks, Angus. We should be doing our interview one-on-one soon, so we'll schedule that. And
absolutely.
all the best to the NCB team.
It was my pleasure. Have a good one, everyone.
Thank you. Good evening, everyone. Take care.
Right, so what I'll do, since we have the Omni prospectus, I'll share the link in the chat. Let me do that now. If there are any questions that are there, let me know. So I wanted to hear your thoughts on just everything, the discussion, the offer that, we've done 3 videos now with NCB. So let me share the Omni prospectus. So it came out earlier today. So if you subscribe to our news feed on Telegram, you'd actually see it there as well. We are trying to put things in place for the prospectus review. So that should be coming out probably, it'll come out soon. I wouldn't say tomorrow or Saturday, but likely over the weekend. It just depends on how soon we get to review it. So we'll try at the very least go through the salient points. You can of course expect that we'll try to get a CEO interview. We'll try to get the full coverage that we normally do. So hopefully that helps. But what I will do here is go through at least the offer itself. That's what I can do here for us since we're here, right? I'll just take a couple of minutes and do that. So I won't do a full prospectus review. So please don't think that's what we're going to do. We're just going to look at how much they're seeking to raise and see what we can glean from this, right? All right, so let me share my screen again. So this is what we have here. Let me see, how do I go to full screen mode? That is not better, actually. All right, so I see here, some haven't heard about Omni before, but I see manufacturer of thermoplastic products, and we're seeing some images to the right here. Offer opens May 17th, closes Friday, May 31, so by the end of the month. And of course, we're seeing here, so they're seeking to raise up to 500 million participating ordinary voting shares in the capital of Omni Industries Limited, and at least 120,931,000 participating ordinary shares are available to members of the public. All right, so this is the interesting part that we're gonna see. Let me see if I can zoom in, by the way. Yeah, that's a lot better, right? So 233 million shares for reserve partners, right? 125 million for lead broker, and employees 20 million, right? So that leaves a small amount for the public, right? So we're back to seeing IPOs that are for the junior market. This is not uncommon in terms of structure. And I'll just quickly go to the use of proceeds. I think that would be enough for, let me see, page of contents, where that may be. Apologies for the scroll. I know sometimes persons are not a fan of the scroll, But since I haven't reviewed it before, I have to do that, right? So use of proceeds. Okay. Let's go to that. Okay, use of proceeds are on the right here. So it says they're planning to upgrade existing machines that the company uses in its operations, to purchase additional new machines for expansion, to permanently inject additional working capital, and payment of the following expenses of the invitation, of course, which is common. So that's what the company is seeking to raise money for. All right, so we'll hope to do a full prospectus review, interview with the CEO and the like very soon. So that's the initial offer though. Prospectus, I'm going to share the link in the description, but I shared it in the chat already. So you can feel free to check it out, and then you can watch our prospectus review. All right. I see Kerry asking if it's $1 per share. I know, well, I don't normally look at the price. Let me check. Let me confirm that. It's likely though. It's usually an offer summary. Hold on. Yes, $1 per share, Kerry. I know the market loves that price. So, yep. So thank you everyone for watching. Thanks to everyone who's watched on all the platforms. Please take a moment to like the video. Subscribe to this channel if you're brand new. Follow us on any platforms that you're watching from, and like the video there as well. And thank you so much for being a part of the Learn, Grow, Invest community. And I hope to see you again soon.